Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. Today is March 4th, 2020, and this is a quick look at, what's going on in the market right now with QQQ. QQQ is what I trade. QQQ is what a couple of others guys that I know they're trading, and they're having a hard time with what we're seeing right now because it's not normal for what we normally see on QQQ. First of all, let me let you know this is all for educational purposes only. This is not a trade recommendation. Trading is risky. You can and you will lose money at trading. So please check with your significant other. Please check with your financial advisor. Make sure trading is something that is suitable for you. This is just going to be real quick. I'm going to just take a quick look. I just want to show you what we're seeing if you're not trading QQQ. It's probably happening on everything out there. When volatility, the thing is, when volatility is high, options get inflated, overpriced, and you need to make a decision. Do you really want to trade these things? Do you really want to buy these things? One of my basic rules when trading options, when volatility is low, you buy. When volatility is high, you sell. But a lot of us, with the brokers that we're with, they don't allow us to sell options or sell credit spreads because of the obligations that you have on the leg that you sell. The leg that you sell on the put side, you need to, a lot of times they're going to require you to have the cash. Some brokers, not all brokers, they're going to require you to have the cash in order to cover that position if it gets put to you because you have obligation. You're saying you're willing to buy that particular option or that particular underline at the price that is actually trading at. Let me switch over to an option chain where you can see, and I can maybe kind of point out some things that I'm talking about. Probably would make a little bit more sense. Let me apply changes, show, apply. Okay, we're looking at an option change of QQQ. Say, I'm gonna use QQQ because this is the thing that we're trading right now. Normally, some of us, or some guys I know, they like trading I'm looking at the option chain. They like trading way down here. But now trading way down here just doesn't make sense. This is delta here on, let me change this up a little bit too so we can see what's going on. I should have it somewhere here, under here, right here. This is what's for me, and the way I trade, since we're buying options, we're looking at directional moves only. So now directional moves is based on, if directional moves are based on kind of on delta, you can use delta for that. So if it moves $1, it's going to move 6 cents. So that means that option if that underline, if QQQ moves a full dollar, this option should move 6 cents. That's all. And then if you got so that means looking at you're going to have to kind of like nail your entries and your exits and all. Your entry is going to have to be somewhere near the low and the low of the market of the day if you're going long on the call side. If you're going short, you're going to have to nail that top. That means you're going to have to, when that market is going up, and getting ready to reverse back down, you're going to have to be looking to get into your position. But what I've noticed on QQQ is a lot of times when the market is going up, the prices of puts are also going up because they know, market makers, traders, they're selling these things. So they're trying to get the most money that they can for these options. So the prices on these options are not really working out the way you would expect them to. But they do finally turn around and then do move in your positions. Like once the market starts going down, these put options will start going up. But you don't want to be playing way out here. If not, it's got to move a full dollar for you just to get 6 cents. So playing a delta that low just doesn't make sense in this market. You're going to be really hard to make money in this market playing a delta that low. That's why I'm looking, one of the things that I do, I say I can't do that. And normally I like playing around this area here, right around this $2 area. Again, that delta, 0.13, that delta is, for me, it's just way too low. I cannot play that. Now, if it has to move a full dollar for me to make a lot of times you see me getting 13 cents. A lot of times on my trades, and I get 20, I was getting 20 cents. when volatility was low. Now that volatility is high, yes, it's high because the market is moving, as we can look up here, a full $5, but it was moving $5 before. So nothing really has changed other than the market is dropping and a little bit more fear has come into the market, but it's almost back to the levels. It's not quite back to the levels, but it's back close to the levels where I was trading at before. But the prices are gone crazy. Now looking at the call side, look at the call side. That was the put side. How far you out have to be, and this is where I'm playing at now. I'm playing the thing. Trying to play the dollar side here, 0.14. That's about where the $2 was on the put side. So that should let you see how inflated the put side is, almost 100% higher than what it normally would be when you were trading those different strikes and all. So you got to get off those strikes. You got to get to a higher delta and all in order to make the same money that you were making before. Yes, it's going to cost you more money, but now you got to really nail the whole directional trade, that the directional play that you're actually doing now. You got to be focused. You got to be at the top of your game in order to play this thing here in these type of markets. And the other thing that you see the spreads have come down around 3 cents, 4 cents right there right now. That's better. And up here 5 cents where I was playing at earlier. That's better and stuff. So that's the other thing. Maybe even at morning time now to play these things, it's just the market is too volatile. The spreads are too wide. I saw spreads as wide as 50 cents. 30 cents, 20 cents, when the market is going crazy. I think yesterday the spreads got as wide as $1.50. Some announcement was probably going on at the time. And I was already in my trade, and I was sitting down. I actually had a position sitting down at the low at $1.50. And I was already in the market, and I was trying to say, okay, can I get some more filled at that price? And it just sat there for about 15, 20 minutes. That's a long time for us day traders. And it was just sitting there. And then I saw the market moving down. It had already made its pop up, and I had already had some contracts into the market. I already had a position in, and it was at $3, and I put my thing to sell at $2.50, and it actually gave me a partial fill at that point. It didn't take them all, but it took a part of them, which I was happy. That partial fill made me more money than what I was expecting to make on the whole trade. So then I actually moved to try to get the rest of it out down lower, and it wouldn't. The market started moving down, and it moved down there and wouldn't fill me. And I finally did get out of the trade. But what I'm getting at, you got to learn how to use limit orders and play in between these wide spreads. You got to learn to use limit orders and look at the market and see what the market is actually doing. When the market is going down, you need to move. You need to be on that bid or maybe slightly below that bid. The market will come to you. These option traders do want to sell these options and all if you're buying these options. If you're selling these options, be just as patient on that top side. Try to get the most that you can when you're selling these things and all, because the volatility is definitely going to come out of this market sooner or later. And at the overpriced as these options are, you should be able to make money. Nothing's guaranteed in this market. Nothing's guaranteed because it's still a directional play also. But volatility is so high, it's hard not to lose, but you can lose money. You always can lose money in the market. And that's what I kind of really want to share. Right now, instead of me playing even my $2, that delta is part of my rules is delta. I have to play a 0.3 delta or higher and all. So if I'm looking at my dollar, want to play a dollar player, that delta is way too low for me. And where I was playing at before was this $2 play. That delta is still too low for me at a 0.3. So I had to move up here to the $3, actually to about a little over $3 to actually where I want to place my trades at, because that's the delta that I want to play when I plan. Because again, I'm looking to make 10. I've been making 20 cents on my trades, and with the market moving $5 or more, $3 or more, like it's been moving, I still can make the same money that I want to make in the market. Yes, it is costing me more money to place my trades. I just have to be okay with that. You have to be okay with what's going on. And that's all I can say about that. Again, you have to be flexible in this market. You got to and if you're not comfortable nailing your trades, if you go back and look at your trades and see, no, I really wasn't within 5 cents, of that bottom, or no, I really wasn't nailing that top. I wasn't within 5 cents of that top, and that's the way I look at my trades. When I'm trading, I'm looking at, let's flip over to a chart right quick. I'm looking to get in. I like using a 5-minute chart. I'm looking to get in when I see this market dropping, and I see start seeing these reversals. I go down to a smaller time frame. Let's go down to a 2-minute time frame. And when you're down to a 2-minute time frame and you start seeing stuff like that, you start seeing that on a 2-minute time frame, it's time for you to get into that trade. You see this, if you missed it here, you get it here. I'm showing you a little bit something extra that I normally don't show either. Also, you got indicators that are telling you we're at a bottom. It's time to get into that trade, and you into that trade, and look how far you can ride these things up. I'm going from say $12. Say if you got in late, you got in way over here, $12. This thing went from $12 to $14. Me playing a 0.3 delta, now I'm still able to get my 30 cents, 60 cents on that trade. And that's the whole thing. You've got to learn to look at analyze. One guy said, I overanalyze the market. No, I don't overanalyze the market. I'm looking at how I'm going to make money on here. That's always what I'm looking at, how I'm going to make money. Does this trade make sense to me to place this trade at this time where I'm placing it at? And that's one of the things that you need to do. Also, now look at our indicator. And indicators also telling us to get out of that trade. You know, it's nothing here magical, nothing big secret here. It's just learning to use the right tools and you being disciplined enough to follow the tools that you have. Again, that's all I really want to share. This is Solomon from Right Side Trading, where you can learn to trade on the right side with confidence. Talk to you later. Have a great day trading. Bye.